This is the Daily Market Comment for Friday, January 20th by Haralabos Bisuros. I'm Christina Marujos, and thank you for joining us at XM.com. The US dollar finished Thursday lower against most of the other major currencies, gaining only versus the risk-linked Aussie and Kiwi. Today, the greenback is losing against all except the yen and the pound. It seems that investors are still unsure how interest rates will move hereafter, despite Fed policymakers insisting that rates will rise beyond 5% and stay there for a prolonged period. Market participants slightly increased their implied terminal rate to 4.9% after the better-than-expected initial jobless claims for last week dropped to 190,000, suggesting that the labor market remains solid and thereby that interest rates could move a bit higher. Yet the US dollar did not stage a decent comeback, finishing the day lower against most its peers. Another proof that investors are more willing to sell when data confirm their pivot hypothesis rather than buy when the opposite is true. The euro managed to rebound and return above $1.08, perhaps aided by European Central Bank President Lagarde's remarks yesterday at the World Economic Forum in Davos. The ECB chief said that inflation is way too high and that they will stay the course of rate hikes, pushing back on recent reports suggesting that ECB officials are considering slowing their rate increments at the March gathering. Traders' stubbornness to keep euro-dollar above 108 suggests that, should new data allow it, they may be willing to take the action all the way up to the 111.75 territory, defined as a resistance by the high of March 31st. The yen is pulling back again today, even as Japanese inflation accelerated, with both the headline and core rates doubling the Bank of Japan's 2% target. However, the data adds credence to investors' view that the bank may need to continue removing accommodation. Investors are expecting more action at the April meeting, the first after Governor Kuroda steps down, and the next that will be accompanied by updated economic projections. All three of Wall Street's main indices finished another day in the red. The main driver for equities may be fluctuations in investors' mood regarding a potential recession in the United States. Ergo, should economic data and earnings results continue to add to such fears, equities are likely to continue drifting south for a while longer. Gold posted another leg north as expectations of rate cuts by the Fed and anxiety about a potential recession are a positive blend for the yellow metal, which seems to have regained its safe haven status. With the next resistance being the round number of 2,000, it seems that bullion has ample room to continue drifting north. This was a Daily Market Comment at XM.com. Have a great weekend.